Welcome, everybody. Thanks so much for coming today. We're going to go ahead and get started here in just a minute. We do have people logging in, so just want to make sure that we get as many on here as we get started. But today we're going to be sharing some stories about some surprising tax savings that can help our clients, and what we do every single day to help families so that they can enjoy a secure and independent retirement. You're going to get both case studies and strategies about cutting through the retirement tax bill, and we're looking forward to sharing this information with you. We believe it's going to be very eye-opening for a lot of people here. As we get started, this is what our attorneys make us say. We are going to be talking about different topics, Social Security and taxes today. Just keep in mind that we advise you to meet with your own individual advisors when it comes to tax advice, and also want to know that we're not affiliated with any government agency, as you can see there. So with that, I think we've got a lot of people logged in here. Tyson, let's start with
let's jump in.
This great thing today.
I'm Tyson Thacker. You've heard from my brother Ryan Thacker. We are the founders of B.O.S.S Retirement Solutions and Advisors. And a lot of people call us the Retirement Brothers because we are brothers. And before we get started, we wanted to give you just a quick idea of who we are. We were come from a family of 7 kids, and each of us are married and have 4 kids ourselves. And we're so grateful that we can work together as brothers and as founders of B.O.S.S. B.O.S.S, by the way, stands for Build the Optimal System of Security. It's something that we want everybody to experience as they get closer to retirement. And so we're excited to be here with you today.
Well, Tyson, let's dive right in. Here's what we want you to know. If you only walk away with one big idea today, let it be this. Most people have no idea how much you could reduce your tax bill with a little tax planning. That is the big idea that we really want you to get out of of our class today. And we want you to think about, how are you currently planning?
That's right.
In your current retirement situation.
And as it says there, today we'll be sharing some surprisingly big real-life tax savings that we've uncovered for people who may be a lot like you. That's what we're going to be talking about today, not just planning and the strategies, but real numbers from real families that we've talked to and the surprising big tax savings that we've helped them uncover. Now, of course, every situation is going to be different, but the only way you're going to find out what you could save is to look at your specific situation. So we wanted to bring in some case studies that might help you understand how the potential of these strategies could help you and why we use them for so many of our families.
I love this. Let's get started, Tyson. So coming up here, we're just going to give you a quick preview of what we're going to be talking about in the cases today. And of course, as we go through these examples, we've changed the names of the different families that we've helped. But and also keep in mind that these examples are for illustrative purposes. And so your own individual results will vary based off of what your unique situation is. But, Dan and Ella came to us in their mid-60s. They're on the verge of retirement. And we found one move that could reduce their retirement tax bill by more than $189,000. And this is a big deal. This puts 6 figures of their money back in their own pocket instead of paying it to Uncle Sam.
That's right.
The IRS.
Next example is Sarah and Brian. And they were looking forward to a well-earned retirement. They were surprised, not in a good way, when we looked at their potential tax bills, especially as they looked out 10, 20, even 30 years into retirement. But they were also then relieved to learn that we could help them to reduce those tax bills by more than $495,000. And we're excited to share some more detail as we walk through their scenario.
Tyson, one of the things that we always say, whether it's on the TV or in the radio show, is we talk about you could save tens of thousands, if not hundreds of thousands of dollars. Well, what's interesting about that is, we typically do that to be more conservative. But in this next case with Robert and Nancy, this is literally, here they are. Robert and Nancy come to us with a 7-figure net worth in their late 50s. and they could literally save 1.5 million
Yeah.
in potential savings. And so that's a lot of money. And the main reason why is because that money is in their IRAs and 401ks, accounts that have not been taxed yet, and they're set to pay a hefty tax bill. So with this strategy, we show them, here's the things that you can do to put this control in your hands instead of Uncle Sam's.
That's right. So we've gone through some real life scenarios, but now the important question is, how does this work?
That's right.
How are we able to uncover these surprisingly huge tax savings, and how might you be able to save a chunk of change in your own retirement taxes? We're going to share that as well.
So, in the next few minutes, we're going to share it all. And, we want to talk about how you could dramatically reduce taxes in retirement. We're also going to share some real life case studies with potential tax savings from, $70,000 to $1.5 million and more. And you're going to learn the best strategies for your situation and the potential tax savings that you can enjoy with these strategies. And so, Tyson, as we look at these, just think about this as you're watching this. We know that everyone's busy.
That's right.
And we also want to give you the opportunity right now, if you're like, hey, I just want to be able to talk to someone, what should they do?
Yeah, so at the end of our presentation today, we're going to offer you a no obligation opportunity for a free customized retirement tax savings analysis. And this free analysis, well, it could help you reduce your tax bills in retirement by tens of thousands or even hundreds of thousands of dollars, Ryan, as you've already mentioned. And it's not going to cost you a dime. And what we've found is, there's some people who are already ready to take this opportunity before we even go into the case studies. Now, we recommend that you have the opportunity to take a look at those case studies as well, but all you've got to do, if you're ready to go, is click on the button on your screen to request a free consultation, and this free consultation is only for those who are clicking on the button in today's masterclass.
Tyson, for those of you who are continuing to stay with us, oftentimes people ask us, well, who are you guys? And why are the Retirement Brothers always talking about how you could potentially save some money? And first of all, who are we? We're B.O.S.S Retirement Solutions. B.O.S.S, it is an acronym. It stands for Build the Optimal System of Security. And that's our goal, is to help you live a financially secure and independent retirement. And we cover taxes and Social Security and income and a whole lot more. We started B.O.S.S Retirement Solutions in Salt Lake City. We now have 6 offices along the Wasatch Front. Plus now we've expanded into other states, in the state of Idaho, and also up into Seattle in the state of Washington. And Tyson, we love what we do.
Yeah, absolutely we do, Ryan. And our company is also fortunate to have been featured in some of the most respected local as well as national media outlets. You see ABC there, Fox Business, NBC, CNN, and so on. You can see that we have spent a lot of time trying to educate and inform those that we talk to about whether it's taxes, Social Security, you name it. We want to help you to feel educated and informed. We also have a weekly radio show on several different radio stations here in the local market as well as in the Intermountain West.
We've also, we're Utah's winner of Utah's Best of State 5 years in a row. We also have been named 5 consecutive years, which is really, really hard to do, on the Inc. 5000 list, which that gives us being 5-time winner. We're on the honor roll there. And, Tyson, this is something that we're proud of because it means we're helping a lot of families.
Yeah, we're published authors of the book, The B.O.S.S Retirement Blueprint, Your Guide to a Secure and Independent Retirement. It is our 4th book, and it's an Amazon bestseller. And we're grateful to be able to spread our message far and wide to as many as we can.
Okay, so forget all the words. Here's the most important thing. We've helped thousands of families just like you plan for a better retirement. And, it's the tangible difference that we make with the families that we've served, because, we've served thousands of them across the western United States. And when we help a client, be able to, look at their retirement situation and, how could we minimize taxes, and, what does this mean to you and your family and your community and those that you love moving forward, and the legacy that you want to build. And, one big way that we help almost all of our clients is on helping this retirement tax question. How can we minimize the taxes that you're going to pay in retirement?
So to that end, Ryan, mentioning taxes, there are really three important tax truths that you've got to know. First, when you really run the numbers, you're likely to discover your future tax bills are going to be much bigger than you expected. Number two, there's some good news. You've got more control over your taxes in retirement than at any other time in your life. And number three, it all comes down to effective tax planning, which is going to be a lot different than just filing your taxes on April 15th every year. Tax planning is looking forward, not backwards, and it could help you dramatically reduce your taxes, especially as you get to and through retirement.
That's right. And, when we look at those tax bills in retirement, here's an important question that we often like to start with is what triggers big tax bills during retirement? I mean, after all, you may think, well, when I stop working, I won't be paying taxes in the same way because my paycheck is stopped, right? Well, yes and no. When you're not working, you won't pay taxes on your paycheck, but there's a lot the IRS may still consider income, and we want to run through these different items because for many of you, we help people over and over again. You get one chance to go through retirement, and so Tyson, let's start with where we see these start to compound.
Yeah, the first thing that we need to talk about are IRAs and 401k withdrawals, or really any withdrawals out of any of your retirement plans. This is all money that you have in tax-deferred or in pre-tax accounts for the most part. And here's the rub is you didn't have to pay taxes when you made the contributions, and you didn't have to pay taxes as your portfolio grew, but Uncle Sam still expects you to pay taxes when it's time to take that money out of retirement, and the IRS considers this what they call quote-unquote ordinary income, so you owe the income taxes as you take it out.
Well, and Tyson, then you have magic birthdays. Magic birthdays require required minimum distributions or RMDs. And, you might think that you could just leave that money in your retirement account. Hey, I don't need the money, and you're not going to have to pay taxes. Well, especially if you're still working or you're living off other savings, but when you reach the age of 73, that's the magic birthday right now, you have to start taking that money out and until that account is fully depleted or you pass away. And like other withdrawals, this adds into your ordinary income for the year. And so required minimum distributions, here you start taking money withdrawals out.
Yes.
Now you have to take out required minimum distributions. They get bigger every year. And then that's not it, Tyson. It gets worse.
In addition, there's the Social Security benefits that you've got to worry about because you think about it, you've been contributing to the Social Security Trust Fund your entire working life since you got your first paycheck. Between you and your employer, you've contributed as much as 12.4% of every paycheck. And because it's coming from the government, you'd think no taxes, right? But depending on your total income, as you add up all of your income sources, Ryan, you could be paying taxes on up to 85% of your Social Security benefits, and that means your total amount after taxes may end up being a lot more small than what you thought it was going to be.
Ouch. And that's why if you're not careful, remember the IRS is adding up all of this income, your IRAs and 401k withdrawals, your RMDs, your Social Security benefits. Then they add in any other income, including income that may be coming from your other investments, and this can push you into a higher tax bracket that's sometimes even higher than when you were working. That means that the marginal higher tax rates and the capital gains tax, and it could even double your Medicare premiums. This is where it really starts to compound. In fact, let's just take a moment to remind you, we call this the tax torpedo, and thankfully, here's the good news of this whole thing is you have more control over taxes in retirement than any other time in your working life. But these tax traps that you face in retirement, there's a lot that you can do to avoid it. And that's the good news. And, this is just strategy. We're not talking about tax avoidance here. We're talking about how could you minimize the taxes. And we'll get to that in a moment. Just talk about what are these tax savings moves that you can do with planning.
Absolutely. So we've been sharing some bad news. Unfortunately, we have a little bit more bad news before we get to the positives. There's really a good reason to believe that taxes are going to be going up soon. And as you think about it, the storm clouds will have a silver lining, but we've got, $40 trillion in debt. We're in a situation where taxes have got to go up. So Ryan, let's go to the next step of where taxes are going and what does this look like?
Well, I think it's important. Who's saying this? This is the Tax Policy Center, the Urban Institute, and Brookings Institution. They say buckle up in 2025 because 2025 promises to be a historic year in tax and budget policy. And the reason why is there's big tax cuts set to expire, which will impact anyone retiring soon or who already retired. And this is one of the reasons why there's a really we know that taxes are going up.
They are.
It's not a matter of if, it's a matter of when. And Tyson, you mentioned just recently that it's a big number, right?
Yeah, I misspoke a minute ago. I said 40 million. I meant $34 trillion. Our national debt is now at a record high of 34 trillion. The government doesn't generate revenue on its own. The only way it can even start to pay this back or even service the debt is taxes, and it comes down to massive tax increases. Massive tax increases not just for the wealthy, but for all hardworking Americans. And here's something nobody's talking about. If you plan on retiring in the next 5 years, these higher taxes could end up decimating your IRA, your 401k, or other tax-deferred retirement accounts, which could leave you with a small fraction of your retirement savings that you were planning on to have in retirement.
Tyson, here's what's funny about this. 34 trillion, that's the number that everyone talks about. You said 40 trillion.
I said 40 trillion, and then I said 40 million.
And guess what? 40 million, 40 trillion, 34 trillion. It's all the wrong number because we brought in David Walker, the former comptroller of the United States government, and he said, guys, the 34 trillion is not the real number because you need to add in Medicare, and you need to add in Social Security underfunding.
It's a much bigger number, right?
Well, the number that he put on it, this is the guy for two administrations, basically the CPA for the United States government, and he says the real number is 123 trillion.
Think about that.
Think about that. So if you think the taxes are going down, they're not. And, then on top of that, here's the quote from Ed Slott, who said that the accounts that are most in trouble are those retirement accounts, tax-deferred retirement accounts, 401ks, 403bs, IRAs. They are on the chopping block. Why? Because that money has yet to be taxed, and it's like a sitting duck for Congress. And Ed Slott, the Wall Street Journal, calls him the best source for IRA advice. And, here's the thing is if you haven't seen this so far yet, everyone's talking about this, but yet what are you doing take control in your own individual situation?
So we promised a silver lining in these challenging times, and it's this. Taxes are lower right now than they've been in over 40 years. And if you take advantage of this short window of opportunity that we have right now, you could save a small fortune in taxes, but here's the rub. This opportunity won't last very long.
So let's get the big reason why you're probably here, and let's talk about how do you minimize what could be your future tax bills. First things first. Well, now is the time to take control of the tax rates because you likely won't get a better window to use many of these tax saving strategies. And as always, the old lesson applies. The best time to plant a tree was 20 years ago. The next best time is today. So just a reminder, that this is not about tax preparation. It's about tax planning, and there is a big difference. And unfortunately, most people simply just file their taxes every April with the help of an accountant or a CPA. But aside for some obvious deductions that may save you a few bucks at this point, what's done is what is done, and there's no real savings here. And so this is why you have to think about it. Your CPA, their job is to report history. And there's some really good CPAs and tax attorneys out there, and we would encourage you to talk and get your own individual advice. But the challenge here is the reason why they simply look at deductions to save the tax bill every year is because they're not really thinking about the strategies.
Right.
They're simply reporting history. And when it comes down to finding the right strategy that's unique for your situation, it's important to keep in mind that there's no one size fits all that's best for retirement. It's about looking at where you are, what strategies could work, and finding your best course of action. So Tyson, let's jump in and let's look at some numbers.
Yeah, so when we talk about these numbers, there's an important note that you need to understand. In these case studies that you're going to see today, we're calculating future tax bills. This is based on how many retirees manage their accounts, and they are taking these regular withdrawals from their tax-deferred account and leaving most of it to grow. The total taxes are taxes that you're going to owe through retirement as you withdraw this money. Now, Ryan, keep in mind that it's always surprising when we talk to somebody about this, that given enough time and growth, some accounts will owe more in taxes than they're worth right now. And when we run these numbers, many clients are shocked at how much they could end up paying unless they take action right now. And here's the great news, is we can help you to do something about it.
So let's dive into these numbers. We gave you a teaser on these before, but when Dan and Ella first of all wanted to start looking at this scenario, they had a $300,000 pre-tax retirement account. So that, in your world, it could be an IRA or 401k. Now, as long as they leave money in there, they don't have to pay taxes on it because it's growing tax deferred even as it grows. But this can be a tax time bomb that leads to some pretty big tax bills down the road. And so, what did we do? We ran the numbers for them, and, we looked at what could be a 25-year retirement window for them. So they're 64 years old, 64 plus 25, they could potentially owe $264,000 in taxes on the withdrawals. Well, you started with $300,000, so how could you owe $264,000? Well, remember, it's growing. And then, here's what we did, is we showed them how they could potentially drop that tax bill down to $75,000. So that difference, again, would be, $189,000 in potential tax
That's big
savings.
money.
Now, when we run these scenarios, Tyson, we also run them at the current tax rates. Well, we just talked a minute ago that taxes are most likely going to go up. So the numbers here could even get bigger.
That's exactly right. So then we've got Sarah and Brian, who just turned 60 and potentially could be looking at 30 or more years in retirement. That's a lot of years for their $600,000 retirement savings to keep growing. And as long as they're not paying taxes on it, that's also a lot of time for their future tax bills to keep growing, without even counting how taxes could go up, as you mentioned, Ryan, during that time. So it seems surprising, but over 30 years of growth and withdrawals, Sarah and Brian could be on the hook for almost $650,000 in taxes on that original $600,000 in their account. Yes, that's more than it's worth today. And we showed them a simple move to make and potentially reduce their taxes by $495,000, Ryan. That's money they won't have to pay to the government, money they can use for their retirement, to care for their family, or however they see best to use that money.
Okay, and let's use this last one here. Now, just to be clear here, we've worked with clients who have saved, from $200,000 to several $1 million in retirement. So what might seem like a wild example for some is par for the course of others. So, we have Robert and Nancy who came to us with $1.75 million in pre-tax savings in their late 50s. Just what their silent partner, Uncle Sam,
right? He's
adding up and he's licking his chops by looking at this, because when we did the math for Robert and Nancy could end up paying over $2 million in total taxes on this account as it grows through their retirement if they don't do anything about it. That is a big, big number. But we were able to show them how they could potentially reduce their tax bill by over $1.5 million using the same strategies that work for so many families out there right now. And so, Tyson, this is a big deal. Imagine if this is your account and you're looking at that type of savings.
Yeah, so as we walk through these examples, many of them are based off of a simple and widely used strategy that we help clients with that can lead to surprisingly big tax savings. It's what's called a Roth conversion, where you convert pre-tax dollars in your traditional IRA or 401k account into tax-free dollars in a Roth. You pay taxes once you do the conversion, and then you never pay taxes on that account again. even if it grows substantially throughout your retirement. Even better, you end up with far more control over your withdrawals, and Roth accounts aren't subject to those pesky required minimum distributions. But there's often far more to a retirement picture, so here's one more example that we ought to consider.
Well, this is Mike and Joan, and they came to us, and they're right here in our local market, and it shows how critical it is to look at your total picture, because when we look at this, Mike was planning to wait to file Social Security until he turned 70, aiming to get an additional $18,000 per year in benefits. So the longer you wait for Social Security, the higher it goes, right? But after looking at his entire plan, we had a completely different strategy for Mike that could yield a lot more money for him. And we proposed to Mike to file for Social Security now, which would get him an additional $200,000 in Social Security income while he and Joan were young and able to travel. And this not only gave Mike and Joanne more money in the front end of their retirement, but it saved them money in taxes on the back end. And so with some forward-looking tax planning, we were able to help them save up to $332,000 in taxes. So, if we just look at these and combine these together, they're going to get an extra $533,000 to spend in retirement between the Social Security that was going to give them an extra $200,000 plus the taxes that they saved, $332,000. That grand total, $533,212. Tyson, that's not chump change.
It's not. And here's more good news: is you've got options. We talked about Roth conversions. We've talked about tax planning with your Social Security benefits to avoid triggering higher taxes. There's withdrawal strategies and managing RMDs from your retirement accounts. There's other investments that may be a fit and could reduce taxes. There's so much that you could do with a little bit of tax planning if you know the tools and what you're looking for. Here's the key. You have to find what works best for you, for your situation. In other words, Ryan, there's no one-size-fits-all strategy. It's part of your total retirement plan, and it can be smart to get help from someone who specializes in retirement planning. And we consider this to be one of the highest leverage money moves that you could make today. Have good tax planning that could move your needle in retirement for the rest of your life.
Well, so the big question is, how much money could you save in taxes in retirement? Well, most people don't realize it, but taxes are lower today than they've been in over 40 years. And it's not always going to stay that way, as we've talked about today in this class. And there's tax cuts expiring next year, so you have a short window of opportunity to take advantage of some defensive tax planning strategy for your retirement accounts. And these strategies could save you tens of thousands, if not hundreds of thousands of dollars in retirement, maybe even more. And we want to show you how you could reduce or eliminate your taxes in a free, customized retirement tax savings analysis. We call it the B.O.S.S Retirement Tax Savings Analysis.
Now, in this analysis, you're going to learn how you could reduce or even eliminate your taxes in your IRA, your 401k, and other tax-deferred accounts. It's going to help you with your Social Security benefits, your other investment income, plus so much more. Now, let me explain how this works. We get some basic information from you. We determine the tax saving strategies that are best suited for your specific situation, and then we simply share these strategies with you so you can see exactly how much money you could be saving in taxes, and the savings could end up being significant.
All right, so now some people are saying, okay, how much is this going to cost me? Well, many advisors will charge as much as $3,200 for a customized analysis like this. But here's the good news. We're going to cover 100% of the cost of this analysis for you. There's no cost, there's no obligation, so you literally have nothing to lose. And here's the thing, is if you're seriously interested in how you could save money on taxes in retirement, don't wait, because we only set aside a handful of spots for these analysis, and so they do fill up quickly. So Tyson, what should people do?
Yeah, we normally work with people who have saved at least $500,000 to several million dollars, but if you've saved more than $200,000 for retirement, call to schedule or click on the screen to get your B.O.S.S retirement tax analysis. Remember, you must call today or click on the button today. Thanks so much for taking the time to join today. We're looking forward to hearing from you soon. Stay safe, be healthy. Thanks for joining us today. And remember, the best is yet to come.